Hi everyone, hope you're all doing well, and today I'm doing my portfolio review on the UK front for the month of April 2021, and this is where I go through my UK portfolio and show you how everything's going. It's a series that I've done every month since I started my UK portfolio, which I actually thought was a year to, well, this month. It turns out my actual first UK portfolio review I did was actually June 2020, so I'm still not a year in at the moment on this UK portfolio, but it's slowly getting there. And this is what the actual UK portfolio used to look like, June, nearly a year ago. And you can see so much has changed since that time. I mean, Barclays has been sold, Aviva's been sold, but some of them positions you'll recognise. And in a second, when I show you my update portfolio, you'll see they're still there, and also they're there with a few more gains as well. But yeah, basically the history on the UK portfolio, in case you are new to the channel, is for so many years I was just a US investor, and yeah, for I think the time that I've done YouTube, which I think is 5 years now, I think people were like, you're from the UK, Jacob, do a UK portfolio and see how you do. And obviously there was no better time than last year to start doing a UK portfolio, and it's going very, very well, better than what I thought, and even better now that I thought it was the first anniversary of the year, but actually we're still off that until we get to June. So when I show you at the moment, I'm very happy with how everything's going. So yeah, I'll try spend a minute on every company and give some information about that. But yeah, these videos actually don't do that well. I was actually thinking about stopping doing the portfolio reviews, but I thought it's just so good for transparency and how things go on. But yeah, so if you are here, make sure you do smash the like button, and if it is smashed, I might carry on doing this series. And I'll try to do my US one in a few days time, and I'll also try to do 3 UK stocks to buy and 3 US stocks to buy. Normally I do them, but I'm a little bit behind at the moment, so I'll try to get them done in the next few days. But anyway, we'll get onto the UK portfolio, and like I say, I'll try to spend a minute on how everything is going. And if you do want to know when I'm buying and selling these companies, just like this whole portfolio, I posted on Patreon when I bought these companies exactly. Then the link's in the description, and also if you do want to start buying some stocks, there's a link to a free trade account as well. But let's get on to the UK portfolio. So this is it at the moment. Obviously you'll notice since the one in June a year ago, there's been a lot of changes, and the stocks that are still there, obviously there's been some really amazing gains on them, and we'll go through the top and we'll make our way around. So we've got 88 casinos at the top, and this is actually pushing towards a 200% return right now. So yeah, this is absolutely crazy. This is one of the first holdings that I had in the portfolio, and yeah, we're up to nearly 200% return. So it could be the first 200% return member in the UK portfolio, which would be absolutely amazing. Airtel Africa up 28%. So this is a bit of a dividend play with also a little bit of share price gain. Pick up a nice dividend on this one. It actually it was one that actually sold off like a few months ago now. But since then it's been on a nice recovery. As well as being on a nice recovery, I actually pick a really nice dividend yield up on this one as well. So yeah, that's I don't normally have that many dividend stocks, but that is one that I do have that's a dividend play. Then we've got Barrett Developments. Same again, I would class this as a bit of a dividend play and value play. So if the dividend comes back, obviously then it'll do very well, as well as having a nice share price gain. A lot of these companies that I talk about, I'll be like, people always ask, so when am I going to sell them? A lot of these I'm really happy to hold for a bit longer. I think they'll still do very well with like the economic recovery, and as well as that, I also think I'll get a decent dividend yield on them as well. So yeah, that's where I'm at with that. Barrett Developments. Boohoo up 41%. Obviously this is one that's always up and down. I think it was only the other day when there was some more news coming out about this one. I'm sure you saw it, like the label situation where they were selling something, I think it was like on the Boohoo website, like it was a coat or something, and it was like £10, and the same thing was being sold in like Dorothy Perkins for like £30 or something. The only difference was the label inside the coat or something. It's like, just stop getting yourself in these situations. So yeah, still undecided on when I'm actually going to sell my Boohoo positions, so we'll see what happens. I still think it's got a lot more upside, but I'm just like, it's just stop getting yourself in the news for the wrong reason. But still, we're on a 41% gain. Next up, Card Factory. So yeah, we're up 77% on this one. I know some of you guys have a better average than me on this one, and we're up over 100% on it. Still happy to have that position there. I still think that we still need a full year of sales and a full year of Christmas sales, and I think the stock will go up even higher. So I'm still at least a year off selling that one. But yeah, Card Factory, obviously that was a bit more of a risky play, and quite off. The funny thing is, Card Factory is, it was only a few months ago where people were like on the channel going, oh, you pick Card Factory and it's down. I was like, just wait, see what happens, and there we go. And also, it's one of those where you've got to disconnect yourself from the stock. At some points I was down like 30% on Card Factory. and obviously now up 77%. So that's like 100% U-turn on what I was on. And yeah, it's just one of those, having the confidence in the company, holding the company in the dip. Sure, it was a little bit more of the higher risk ones for sure, but look at that turning around, and that's just having the confidence of knowing your company, knowing it inside and outside, and you'll be happy to hold it in that dip, and that's exactly what it was. Jet2 up 86%. Now this used to be a 100% return club member, and it's had a bit of a dive recently. One that I'm thinking, it's I think it's because there's questions whether or not they're going to lose a summer trade on this one. We'll see what exactly happens. I mean, I'm a fan of Jet2, and I'm sure it'll be up in 100% return club. But for the guys that always ask, like, is it too late to buy Jet2? If you were to buy Jet2, these are the sort of dips that you want to be considering it on if you do want to get involved. So that's what I'd say about that one. Greg's very much like Barrett Developments. Used to be one of the biggest holdings in the portfolio, then Boohoo took over, then S4 Capital took over. Same very much with that. I think get a full year of sales, economic recover, see where the dividends at, and reconsider that one. I don't see myself selling Greg's this year. I don't probably see myself Greg's selling next year. It will be more than we'll be looking at 2023 when I consider selling Greg's, just from there. And that all depends on where Greg's are at, and also Greg's a bit more at higher of the ceiling. There's only so much more they can do to increase revenue and profit. But also considering that management team probably move away very soon as well, so that's also something that I'm considering. Then you got Hollywood Bowl up 53%. This one, same again, will recover from the boom, economy recover. Also, you'll have a dividend yield coming in. So I'm still 2 years off selling that one. By the time I will sell it, it'll at least be 100%. Then we've got Hotel Chocolat up 1% on that one. That's the newest position in the portfolio. That's probably about the size. Hotel Chocolat is never going to be like an S4, a Boohoo, a Ball, a Greg's position. It's always going to be a smaller position, but it's the one that I'm buying at the moment, and currently at 1% on that one. I think, like a few other ones, it's had a bit of a surge recently because of the confirmation of shops opening. Then we've got JD Sports up 59%. Same again, High Street will recover, but it's done very well on this online sales front. And also the thing as well is you got JD Gyms as well, which will open back up as well. So just happy to keep holding that one. Legal & General up 48%, which is a good one because it's also a dividend play. That's the main reason why I got on it. But as well as having a nice dividend, very much like Airtel Africa, I also got a bit of share price appreciation on that one, which I think is also amazing. So yeah, we'll carry on holding that one and pick up my like 8% dividend yield I'll get on that one, I think. National Express up 144%. This is the second, which one's going to make the 200% return club between National Express and 888 Casinos. Will be very close, but I think obviously 888 might take it. But National Express, obviously they will, to be up 144%, and we don't even have an open recovery yet, opened economy yet. I think that will be, one that does, I at least see that going up above £5 in the next 2 years. So yeah, I'm happy to carry on holding that one. And then we've got Rightmove. For some reason, it looks like the arrow's not in line with the blue bit. It looks like it's on the same one as National Express, but yeah, just as once again, I think the housing market's still very, very strong, and that will do very well over the next few years. And then the new biggest holding in here, S4 Capital, up 12%. Once again, that was a company that I was down a little bit on, kept on averaging in, and now we're seeing a little bit of a recovery. Great company. I expect it to be at least £10 in the next 5 years. Realistically, I expect it to maybe go to £20 in the next 5 years. I got a lot of hope for that one. That's why it's my biggest position now. And S4 Capital is a exact company, I got a few messages on saying, when's S4 Capital going to do something? And it's like this, I don't know what you're on about. S4 Capital is doing the perfect thing that you want as a long-term investor. You buy it, the stock goes down from, I think I started buying at like £5, maybe £5.20 or something. Stock went down all the way to like £4.20. And that was over a course of a 3 months period. Amazing as a long-term investor, because what you do in that 3 months period is you just average, got my average from like £5.20. I think it's like £4.70 right now, and now I've got more and more upside. You know, if I didn't average in, I'd basically be flat on my position, but because I was able to average in, I got a lower average, and now I'll get more benefit in the long term because I'll make more money because of my average being lower. And S4 Capital was the perfect situation as a long-term investor where you can just average into your position, so no complaints at all. And yeah, it's starting to kick on. Like I say, I've got a lot of upside. I think it's got a lot of upside. And then the last one, Taylor Wimpey, another house builder, up 47%, very much the same as Barratt Development. Think, you know, housing sector strong, it will do some more returns. I'll also hopefully get a bit of a dividend on that one, and like I said, I'm still 2 years off of selling that one. And overall, like, there's no stocks in here that I'm planning on selling at all. They're all at least 2 years still holding. But as you can see, this is the perks a year on nearly of having a portfolio, and some really good gains on this one. Buying wise, there's nothing really I'm looking to buy. New positions wise, obviously if some stocks drop, I'll still average into them. But yeah, buying wise, there's not too much I'm looking at. I know some of you guys, that's why I've not been talking about UK stocks recently that much on the channel, just because they've just steadily gone up in the background, and I don't tend to talk about what's going up. I tend to talk about what's going down, because that's the next thing you can buy to make money. But yeah, I'm can't really find anything I want to put in the portfolio. I'm also cautious about the amount of positions I do have in it. I don't want to go too much more than this. But yeah, if there's something that I do find, I will buy it. I've had, obviously you guys have been suggesting a few at me. I think some of you guys were like on about Ashted, just being on too much of a good run for me to go buy now. Games Workshop still needs to come down more. Ocado probably still needs to come down a bit more. Those are some of the ones that are being mentioned a little bit in the channel. Sumo and Team 17, those are two other ones. Still, once again, rich valuation for me. I think like 50 PE for a company that's growing at 10% revenue. Still a very rich valuation for me. So yeah, there's a few that you guys have mentioned, but I still can't find one that I can justify the valuation on and then go buy it. So if I find something, I will do. You know, I've been considering even Rolls-Royce and Aston Martin at the moment. So yeah, if I find something, I will buy it. But at the moment, this is what I'm holding, and like I say, I'm very happy how this portfolio has gone. You know, I think when you look at, you know, I think we've got is that 200% club members? We used to have 3 with Jet2, but yeah, you know, we've got AA Casinos, we've got Jet2, National Express, and I think, you know, only down the line, maybe another 12 months, you know, Barratt Development, Taylor Wimpey might be there, Card Factory might be there, Greggs and Hollywood Ball might be there, JD Sports could be there. You know, I think once we look a year down the line, the portfolio will do even better than where it is right now. But yeah, this is where I'm at with my UK portfolio. So you guys that tracked it every month, you can see how it's doing, and I'm very happy with the gains that I've had for the, well, nearly coming up to a year. But yeah, all pretty good. So yeah, if you do want to join the Patreon, this is when all these companies would have been posted when I'm buying and selling them on there. The link's in the description, and also I think you can see the benefits of long-term investing starting to come on here. So it'll be interesting to see where, you know, when we look back and show a clip of April 2021 in 2022, it'll be interesting to see how it's developed. But yeah, I hope you enjoyed it anyway. If you new, subscribe. If you're here all the time, smash the like button. Hopefully the views do okay, because like I said, this video series, the views have been dropping off recently, and I don't really want to knock it on the head because I think it's very good for transparency, but you know, obviously you guys make sure you do smash the like button, and hopefully I can keep doing this series. But yeah, that's the UK portfolio. I'll try do my US one in a few days time as well, and also the free stocks to buy series as well. So thanks so much for watching, and I'll see you on the next video.